Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
This is Charlie Pellet with a look at stocks on the move, with the Dow, the S&P, and NASDAQ all advancing today. And joining us now, cross-asset reporter Emily Grafeo. Emily, cannot ignore the move today in shares of Alphabet, parent of Google, the stock down 7.5%. This on a day when stocks were moving higher. What was going on with Alphabet?
That's right, Charlie. The trading volume was almost quadruple the 20-day average in Google. It was the biggest drop since February, and it's all stemming from a potential partnership with Apple potentially eroding. So today, an Apple exec said that Apple is considering revamping Safari to focus on AI-powered search engines. So right now, if you're an iPhone user, you go and search something on Safari, it's Google. Google is the search engine powering that. Today, Eddy Cue, Apple's senior vice president of services, said in testimony in the U.S. Justice Department's lawsuit against Alphabet that they're considering revamping to Safari to, again, focus more on AI. And that would potentially, again, maybe erode this partnership that they have. At the heart of this dispute is the two companies' estimated $20 billion a year that makes Google the default offering for search queries in Apple's browser. And again, trading volume was super high. When you look at what the rest of the street has to say, though, Baird said that for Google, they're not surprised by the reaction to the headlines today, but most of what they heard is information and risks that maybe the market should already be fairly well understood, and that losing the Apple contract could still be net neutral for Alphabet without the $20 billion in annual payments to Apple that directly impact Google's margins.
All right. If we are talking about Alphabet, what about Apple? How did it respond in today's trading?
So Apple was also down today, but not as much. It closed down 1%. It has, though, been falling for 4 straight days. If you look at what Google's been doing, it's only been falling for the last 2, but just a brutal day to be long Google.
And lots of earnings today. Among the companies reporting, the ride-sharing company Uber. The stock moved lower. What happened with its results?
So Uber reported weaker than expected quarterly gross bookings. So gross bookings includes ride-hailing, delivery orders through Uber Eats, and then also driver and merchant earnings. So that total number was $42.8 billion, and analysts projected $43 billion. Revenue also landed below expectations, so did operating income. Additionally, Uber cited lower U.S. inbound travel, and that's why they've had these slower gains in their business. This reminded me of what Airbnb said just last week, that fewer tourists have been coming into the U.S., and so these businesses that in part rely on tourism from outside the U.S. are seeing some signs of slowing.
So Uber shares down today by 2.5%. They're based in San Francisco. Right. The crosstown rival Lyft also declining today, down by 2.3%. You mentioned tourism as a major part of what was going on with Uber's results. Cannot ignore the move today in the Walt Disney Company. Out with earnings this morning. The stock surged big time. Today we saw shares of the Walt Disney Company up by 10.8%. What has investors so excited?
Yeah, Charlie, so this is a little bit defying of my thesis that tourism is slowing, because at least for Disney, they are okay. They said that they're benefiting from faster than expected growth in the parks business, which of course relies on tourists, but also the streaming business. Streaming seems a little bit more immune to perhaps trade war headlines and tariffs, but they boosted their guidance. So Walt Disney reported fiscal second quarter results that beat estimates, and then they also raised their full year 2025 outlook. They said that full year earnings will rise 16%. The reason why the street was really focused on this and perhaps so excited about it is because we've seen a lot of companies actually cutting their outlook or just suspending guidance overall, citing uncertainty about tariffs. And yet here we are, Disney came out and said, we're not only going to, bring this outlook, but we're also going to up the previous forecast that we had for growth. So Wall Street was really cheering that.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.